Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, January 2nd. Happy New Year, everybody. I hope you guys had a wonderful time, good, safe time with your families and friends. Today, we've got a few economic data to go over. We'll start off with a weekly jobless claims that we get every Thursday. So last week was revised about 2,000 higher. It was at 222 last week, but it was revised to, another 2,000, so it came in at 224. Forecast is calling for 223,000 people applying for unemployment, and it came in at 223 or 222, excuse me, for last week's reports. So this is good data here. We'll still keep our eyes on this in case it increases. We did have 2 weeks in a row that were short weeks. Obviously, which will be next week will also be a short week due to this will be the report being reported. So, anyways, 222 is for last week, which was short due to Christmas, and then this week will be short due to the New Year's. So we'll kind of watch these. January we should have a better indicator probably by end of January what the rate, what we're looking at in terms of jobless claims. But so far everything's been looking good in terms of the job data. Market manufacturing got their final revision here. Now, the previous month in November was at 52.6. Anything above 50 on this index is considered expansion or optimism. And the final number came in at 52.4. It was revised a little bit higher from 52.2 to 52.4. Not quite to where it was in November, but still an optimistic or even expanding area, which is a good sign here. So let's kind of jump ahead here to the headline news. Stocks are up currently now that the holidays are over. We're getting back to some norm. Stock market is up. Dow's up over 100 so far this morning. The news so far today is China. We have two items out of China. One was a move by the Bank of China that they were going to reduce the commercial banks' reserve policies by 0.5%. So that means they could put more money out there into the markets to help stimulate the economy. The markets like that as well. And then the other item was they had their PMI that came in. It was like ours. It was below the November, but still an expanding territory. So they were fine with that. That it was at least still an expanding territory. Let's jump ahead, see how this is playing out in the bond market. Bond market is up. So as you saw these last few days, sometimes stock market was down, but also the bond market was. So basically, it was just money coming out of the markets. Money is coming back into the markets as we're seeing. Right now, we're up about 17 basis points, which will translate into better pricing today, which is a good sign. If we can get above these levels, if you can see here, we're kind of getting to levels where we were before we bounced down. If we can get above that and stay above that convincingly, we have more room to the upside here, to this next level of Fibonacci level here. So that could be approximately about 40 basis points, which would translate to almost a quarter to 0.5% in the interest rate. So, actually about, I'm sorry, an 8 to a quarter percent in the interest rate. Excuse me, misspoke there. So that could be good news if we can break above that and work our way up towards this Fibonacci level. We could see hopefully maybe much as a quarter percent in rates improvement. So that's pretty much 10-year Treasury. 10-year Treasury is down. As you can see, it's approaching the 25-day moving average. And that is about 1.86 so far is where it's at. So it's just a hair under 1.86 on its index. All right, so that's pretty much a wrap for the day. If you guys want to buy or refinance and you're located in California, again, love to hear from you guys. We've helped out many families with their home purchases as well as with the refinances. We helped them develop some plans utilizing the structure of their debt to be able to accomplish other items here, including college planning to retirement and other different solutions. So we'd love to be able to talk to you about how we can help you guys out. Best way to contact me is direct message me or email. Email is the fastest way. That's right here. So anyways, to recap, rates should be a little bit better today, which is a good sign for us all. You guys have a great rest of your day. Thanks so much for watching. We'll catch you guys tomorrow. Bye-bye.